Sup, freaks? This rip was brought to you by our good friends at River. River has a new referral program. Go to river.com/TFTC for $5 worth of Bitcoin. When you sign up, set up an account and buy $100, you're going to get $5 of Bitcoin on top of that. River is the most secure Bitcoin exchange since they don't rely on any third parties. They built everything in-house, from their wallets to their Lightning Network wallets. They also have zero fee, dollar cost averaging. Other platforms charge large fees and have giant spreads. Go with River to avoid that. If you set up your DCA, again, you're not going to pay any fees on those buys. River also has a relationship management team that's US based and available by phone for you or your business. You can actually call River to get some customer support. It's a great value add that is hard to find these days. And again, they build everything in-house, including their cold storage, and all Bitcoin is held one-to-one in their multi-sig cold storage wallets, but they encourage self-custody as Bitcoiners. So the goal is to get you Bitcoin and to get it off of River into a wallet that you control. They build everything in-house. It's the most secure exchange. They've got free dollar cost averaging, and they have the new referral program. So go to river.com/TFTC, sign up, and you'll get $5 worth of Bitcoin after you buy $100. Enjoy this rip. We're live. We're back for our monetary base quarterly update, which in recent updates, we've glossed over the monetary base and just dove into a bunch of charts and tangential discussions, which I'm sure will happen today.
I'm sure of it, my friend. I'm sure of it.
What's on your mind right now?
Not too much, got a honey badger this week. You were there last year. You're not going to be there this year, I presume.
No, I have to get back to Austin, have a wedding.
Cool.
Tell Max
that
we cannot make it.
I'm actually not going to make it this year either, unfortunately. But if any listeners are in Europe and last minute want to go to a very high signal conference, definitely do check it out. It's a great one. So coming up this weekend.
I think it's the most high signal conference in the world. And Riga is a beautiful city.
High praise. High praise. Yeah, it's a great one. So cool. Got that coming up. And, I was just sending you some fun little text last night about the Naira, one of the early CBDC pilots, and not just pilots, but active programs championing the CBDC. And do you have the press release? I actually didn't pull it up. Do you have the press release?
Yeah, I just gave it to Logan.
First paragraph of it.
Yeah, we'll pull it up. But long story short.
Yeah, it's pretty funny. Long story short, eNaira future uncertain. After, I don't have to say, it's the former central bank chief Emefiele ouster. And basically, they said, CBDC looks very uncertain. The former central banker is now in the custody of the state security services, also likely to be questioned on the funds used to deploy and push the adoption of the eNaira from inception. So quite funny. I mean, if it wasn't so tragic, about playing with people's lives and people's money. But we've talked about this before. I mean, I'm sure you have heard the story, Marty. I'm not an expert on Nigeria, but earlier this year, they really pushed it. They even tried to make other Bitcoin crypto withdrawals illegal. And it just failed miserably. There were protests. They massively cratered the physical stock of money, actually. And so that's what I wanted to show you.
So the story was they were trying to phase out cash, right? Or they didn't position it like they were phasing out cash. They positioned it like they were recycling notes or creating new notes that would then go into circulation. So the Nigerians had to turn in the notes that they had, the physical notes they had before a certain date. And then they turned all their money in, and they didn't have the new money on the back end.
Cratered the money supply. And actually, I can show you the physical supply here. So if you want to go back to that, Logan, where we were on my screen, pretty wild. So this is like a 60-year chart. The Naira started in the 70s, actually, but they must have done a little bit of a revised money supply. I'm not sure what they had before in the 60s, but I have that that sort of matched up to it. But regardless, This is the money supply. And before this year, they were at about 3.2 trillion Naira. This is actually one of the biggest currencies in Africa. Let's take off the growth rates. There you see it. So at the start of, in December, about 3 trillion. It was going down a little bit. And it just cratered it to by February, it was 980 billion Naira. And then didn't work out so well. Already back up to 2.6 trillion Naira. I don't actually have the supply. I was looking for it. If anybody sees it, please do send me a link. I haven't actually seen a transparent supply of the CBDC itself, but this was the physical stock. And it's very eerily similar to India, which I will refresh the listeners on and the viewers if you're watching this in a second, what they did in 2016. But basically, yeah, try to roll this out. Not very transparent, causing a lot of problems. In India, there were even deaths. I'm not sure if there were deaths here. I'm sure there were lines. I'm sure there were issues, but there were definitely protests in the street, which I read about. And yeah, look, the famous CBDC promise is not delivering, and they're already back up. And I'll put a trailing 12-month percentile change here. So at the worst of it, they were down 70% year on year. All right, in early this year, February 2023. And now they're only down 20%. But as you can see, it's rising back up. And the compound growth rate, just in case you're curious, over the lifetime of the Naira is 17%. 17% year on year growth. So this is what I've been saying for years. And what I'll continue to say, and we got the CBDC tracker coming out, but everybody wants to talk about CBDC. No one is acknowledging the blunt reality of billions of people's needs for CBDC, central bank physical currency, very basic thing. Of course, even before central banks, you had private banks that would issue notes, but we haven't had that, worldwide for 100 years. Nonetheless, billions of people need physical cash, and I think it's a pretty illustrative example of just how difficult this is to actually roll out these CBDC programs.
Do you think that need for the physical, for cash, is a phenomena that's isolated to emerging markets?
No, I know that it's not. I mean, based on the supply, I'll pull up another one there shortly, but to explain it, there's only 2 countries in the world that I've seen that have really, even though you think, and I know, like, I'm sure, if you're going to go out to dinner tonight or whatever, like, you're going to pay with credit card or maybe Lightning somewhere, but you're probably going to pay with credit card. You're not going to use physical cash, most likely. I understand in the West, in Europe, in America, we typically can't see the cash. We don't think that the cash is around, but it still is. It's just a function of, I'd say, probably lower income velocity transactions, lower income jobs and payments and purchases. But there's only 2 countries that have literally, that I've seen, have tried to physically, besides what we just saw here with Nigeria, which again, they failed, really tried to stagnate the physical currency stock. And those countries are Norway and Sweden. And even there, it's kind of like they were trying to pull it down, and it's just kind of, it's like it's almost floating back up right now. It's kind of flat. But it's a worldwide thing that cash is still being printed. I have a number for that I've blended as well. A weighted average, it's about 10.5% per year. 10.5% per year is the rate of growth of physical cash. And by the way, the rate of growth of like people on the planet is 1.5% per year. So that's a ratio of 7. The supply of physical, like, it's the most basic form of money, right? We don't need to pontificate about bank reserves or deposits or CBDCs. Like, still the most basic form of money is physical cash. And the supply comes out 7 times faster than the demand. I mean, how could a Yale or Harvard economist talk around that and try to make it seem like it was a good thing for the economy? I just don't know. It's obvious you're going to have price inflation with such mechanics of the money supply.
Yeah. Yeah. Debasing the physical stock of cash pretty rapidly. 10.5%
Yep,
annually?
10 and a half, about 10.5% per year. That's the
Yeah.
number.
And the reason I asked that question is because it popped up last week. I saw Peter St. Onge was covering it, but it seems like the San Francisco Fed has a few job postings for people to work on CBDCs within the Federal Reserve System, and which begs the question, like if these pilot programs, most notably in Nigeria, are failing pretty miserably, like why would the Fed even go down this route if they have this evidence in front of them that there's really not demand for it? People want the physical cash. Are they seeing something? Are they trying to make fetch a thing? Um, just wondering. And then it very much sort of counteracts a lot of the public statements that Jerome Powell has made in regards to CBDCs, which gets to another point, which is like the different Fed banks, whether it be San Francisco, Dallas, Minneapolis, they seem to have um, pretty objective takes individually. Where I think the Dallas Fed came out this week and said we have to stop raising rates. It's
Yeah.
really going to affect the capital formation of industries that we need to deliver goods to market. So I wonder, is the San Francisco Fed just this Federal Reserve Bank with a particular leaning that's trying to make this thing happen, even though the chairman of the Federal Reserve, Jerome Powell, has publicly stated that he doesn't see the need for a CBDC where it actually
Right.
functions.
I don't have a direct answer to that, but I mean, they're obviously going to have to look at these use cases. I mean, Nigeria is pretty much, after South Africa, it's the richest country in Africa. And if you can't get them to do it, what are your chances of getting a less developed country in Africa or South America or wherever, even getting on these CBDCs? And then like, okay, well, we'll do it here. And I have said, this is my contention, although I've talked to people in these countries and they don't think it's going to happen either. Like I just said, if there were two countries that would do it, I think it's Norway and Sweden. They're small enough, they're want to be environmentally friendly enough. They have the wherewithal. They're rich enough. They have the wherewithal to push it out and cover the cost of doing so. Kind of socialist in some endeavors, right? So it seems to make sense to me that they're the ones that could do it, like actually make it work. But I have talked to people in those countries as well, and they don't see that happening necessarily. I mean, they think that like an argument is like, well, maybe your bank will lock you out. Maybe if you're a lower income, you just need to have access to some instrument where you can pay. And a CBDC being base money, it's something that should theoretically, like only the Fed or only the central bank, right, could turn it off. And they will, by the way, once they will turn off transactions that they don't agree with. But, the idea is that, you could even get around the political problems of bank accounts, which is funny because you could solve that problem by just loosening regulation in an instant, but they're not going to do that, as we know. So it's funny that would even be an excuse for it. But even if that was an excuse, people that I've talked to in Norway and Sweden are saying that's not a good excuse because, by law, banks have to keep accounts open for individuals and they don't have apparently those problems like they've been having in the UK right now. Although I've had problems with Swedish banks here in the Baltics. But regardless, I think that this is a good example of the problems that are really coming. And, I was reading that article. It kind of, I don't know the political leanings of that publication, but it seemed like a little bit statist. And they were saying, well, it's not the end. It's probably just going to be going back to the drawing board, understanding the value proposition, why people will need it, so on and so forth. But I mean, for the fact, for them to even publish an article like that, which said it, its future may be limited or moved to the back burner, was something that they said. I think that's just extremely illuminating about what the real use case, value proposition, cost, rollout of these things is. And I think one more to close on this one. Let me just roll the other tab, Logan. This is India now. I've shown this maybe on your show before. I've done videos on this. Just this had nothing to do with the CBDC, but I think this is illuminating. They had the 500 and let's take off the rates. The 500 and 1,000 Mahatma Gandhi notes that they wanted to get out of circulation. They said it's in the name of digital improvements and having more digital payments and everything. And so they tried this at the end of 2016. You see here about 17.7 trillion rupees of physical cash, 17.8. And then it was cratered. Same thing in a matter of months, almost in half, 9.3 trillion. By December 2016, 9.3 trillion rupees. And literally by the next, let's look at the percentages now. Already by December 2017, they'd increased the money supply 80% year on year to get back to where they started a year prior. And now you're like, three times, no, double. You're double roughly where they were in 2016. In 2023, you have 33.6 trillion rupees of physical cash. And the all-time growth rate of the rupee for the data that I have, which is quite limited actually, only 20 years, 12.9% compounded. So a little bit better than the Naira. But yeah, I mean, I think it's just, even that, of course, this was not a CBDC case, but it's illuminating to see exactly what almost the exact same case. Very swift rollout, declaring illegal, turn your bills in. And in India, people actually died of exhaustion and it's big.
Waiting in line at the ATMs,
yep.
right?
Yep. It was a big deal. So what's the point of all this? Like, how much longer can they go on with these games?
Well, in both directions, right? Like, I think so that's, I want to make 2 points here. One that builds on what we've been discussing and bringing in another sort of twist to the story. But yeah, like, what are these countries finding out? Like, is it, you just can't rip physical supply of money off the market abruptly? Like, are they going to go back to the drawing board and try and do it in a more methodical fashion moving forward? But looking at the growth rate of those charts, it seems like the way these economies are running, they need more physical cash to be circulating to prop up their economies. And then the other thing too, I'm not sure if you saw this, but the BIS came out with a blueprint for the CBDC earlier this summer. And I read it. And when you dive into the details of how sorry, we got some weed whacking in the background, of how
nice effect to hear it.
Of how they plan to implement it. Like, they're technically not competent. They're talking, like, if we think Ethereum's complex and completely centralized and going to collapse under its own weight in the future, like the BIS blueprint is laughable in terms of the implementation of how they think they're going to do this.
Yeah. Yep. And, that physical cash constant need to grow, which, as I said, globally, I got a number for you. That's 10.5%. I recall even part of the narrative in 2019 when we had the repo spike and they were finally theoretically more normalizing their balance sheet. The Fed had not increased the balance sheet since 2014, and it was even decreasing by late 2019. Of course, this was before all the madness of 2020. But I remember part of the discussion in 2019 after the repo spike was, well, we might need to increase a little bit more, and plus we're running on the, we're running into this lower bound barrier of physical cash, which needs to grow. I remember people saying that on Bloomberg. Of course, was it a policy point or whatever? But they're aware of it. I mean, obviously they're aware of it. They never talk about it. I think it's just the funniest thing that the central bank, the institution in control of the money, yes, they publish these physical stocks. I get them from their websites, but it's such a small component of the discussion. And it was $9 trillion of them around $9 trillion. It's $9 trillion equivalent market, which is massive, right? When I say 9 trillion, 2.2 or something is actual dollars, 2.3 maybe. It's actual, Benjamins, Hundies, and all those things. Like, most of them are in Europe or outside of the U.S. But the rest, 7 trillion, is euros, yen, yuan, nairas, rupees, floating around. So it's a massive market. They ignore it. They don't talk about it. All of a sudden, we're going to turn this $9 trillion, ancient market. It's a 1,000-year-old technology, physical cash. We're just going to turn this over the next few years into this thing called a CBDC, which we take inspiration from Bitcoin, but we're going to be better than Bitcoin. It's laughable to its core.
So do you think it's literally impossible for them to implement it due to the mechanics of this physical stock?
Well, I wouldn't say that. And like I said, I personally think you're going to see it from Norway and Sweden. I think that they have the wherewithal. But these sorts of stories encourage me. And, we'll track it. We're doing the CBDC tracker with the Human Rights Foundation. We'll be launching that by the end of this year. But they've tried dumber things, which we can talk about for the rest of this show. They've certainly tried dumber things.
This guy's literally right next to me, so let's jump into some of the dumber things.
All right. All right. I'll just quickly go through a couple of these. Logan, if you want to go to the next one here. Yeah. So we got the top 5 currencies highlighted. If you've been following us with these quarterly updates for a few years now, this is going to look familiar, but we can build them back out, right? So the rest of the world, it's about 18% of it. It's here. That means 45 different currencies, including the 2 we just discussed, the Indian rupee, which is one of the next biggest after the Swiss franc, one of the next biggest in the world, and the Naira, all in this bucket here, okay, which totals about $4.8 trillion equivalent. Then you got the pound sterling, which is less than 5%, 1.23 trillion. Japanese yen. And the next 4 are the big 4: Japanese yen, Chinese yuan, European euro, US dollar. Now, this is the monetary base. Okay. So this includes that 9 trillion of physical currency I mentioned. And it also includes at the moment, $18 trillion worth or so of bank reserves, which is basically the most core fundamental asset that a bank can hold in a banking system. It's their account with the Federal Reserve. So those 2 things together, the bank reserves and the physical cash, make up the monetary base. And the total is $27.2 trillion, a little bit under $27.2 trillion equivalent. And again, when I say that number, I have to describe this with some unit of comparison, right? So that's the dollar, but you really need to think that these are different currencies that are making up this group. This is the core of the system. This is why we compare it to Bitcoin, because Bitcoin is the core of its own system. It's not a Coinbase account. It's not a Kraken account. Those institutions can hold Bitcoin, but they are not. They are not the actual, UTXO. So that's why we also call this outside money. Okay, so central bank money is outside of it definitely is connected to and highly corrupt in some ways with the current financial system, and they make the rules for the financial system. But at the end of the day, they're the monopoly that sits outside of the financial system. So it's called outside money. So that's why Bitcoin is also outside money. Gold and silver as well are analogous to this in history. They are also outside money. So this is the number that would really compare to Bitcoin. We can talk valuations in a second, but $27.2 trillion. Notice that is down from the COVID peak. Now, it was going steep down by the end of 2022. Then they raised it a little bit this year. You see it went down to like it was 26.5 trillion by the end of last year, about a year ago. And then they raised it back up to 28. Now it's down again to 27.2 trillion, but it was 30.5 trillion at the end of 2021. That was the whole COVID stimulus. And remember, when I started doing these monetary base exhibits and working on this research, it was 20 trillion. Okay, so lots happened in the last 3-4 years. We've gone from a $20 trillion global monetary base up to a $30 trillion one. And now we're down 3 trillion to 27.2 trillion. And this actual reduction in the monetary base, and as I've told you, it's only the bank reserves that are reducing, right? Because physical cash is generally growing in every country. So it's this actual reduction in the bank reserve volume or value in banks' deposits. That is actually the thing that causes these interest rate spikes. So this is the transmission mechanism, as they call it. They don't just, they have targets, of course, but they can't just like put into a computer, we want interest rates to be this. They have to do something. And how they do that thing is that they remove money from the system. Credit becomes more scarce, interest rates rise. That's basically how it works. So this is the core of the global system that you're looking at here. And yeah, I think it's a good primer for anybody that's interested to learn a little bit more about money, because you know, they don't teach you the stuff in IMF briefs or BIS publications. They just, no one seems to want to compile this stuff on a global basis. Is the guy still weed whacking?
No, he's gone. The rain's coming now, but we'll be good.
More soothing.
Yeah, and I mean, it seems like, building on the CBDC conversation, the physical cash, I mean, it seems like all these central banks are essentially, their backs are pressed against the wall and they have no other option but to print more over the long term, medium to long term. Like that reduction from the 2020 peak, I mean, it's still up 35% from when you started doing these reports when it was at 20 trillion. I guess it's been reduced a little bit. And is that recent bump because of the BTFP facility?
Not really. No. The overall balance sheet has fallen for the Federal Reserve from the 9 trillion peak, like more than a year ago. The facility is more of a guarantee. It's not enacted yet. We'll see if more crises happen. But it's not necessarily from that. But that's all I'll say with that. It's just not. I haven't globally. I haven't actually pinpointed which one is more. It might be Europe. I actually see Europe looks a little bit high compared to the rest. That's kind of keeping it a little bit. It looks a little bit more stable there if you just look at the euro there. But I'm not sure of the bump that happened in the very last year. But the U.S. themselves, even with the early banking sort of crises that we had at the start of this year, has not exploded the balance sheet yet. If they do, then we know that it's more money printing and Bitcoin's going to continue to go up. But even this is another thing. I can put the next chart actually up, Logan. Even if they do continue, Powell just gave another speech. They have their Jackson Hole thing and trying to put a happy spin on this more pain that's going to be happening to so many banks and financial institutions' balance sheets. Overall, they're still going to keep printing at the end of the day. I mean, at some point they're going to go back. So this is an interesting one. This is a trailing 12-month change. It's the same chart. I just, one green shaded area. You see the massive bump here. Okay, so there've been 3 massive bumps in money printing before COVID on a trailing 12-month basis. Okay, so COVID on a trailing 12-month basis by February 2021 went up 38.5%. Okay, the global monetary base. This happened 3 times before. Twice, during the GFC years, 2009 and 2011, which, more or less people can understand. And once actually during Y2K. We've probably talked about that, Marty. That's kind of a famous thing. People were literally freaking out, taking cash out, Y2K bug, everything. And that was a 32.9% peak. So those were really the only peaks, major peaks. And you see there in 2019, they really tried to get it down. Like the only time other than just recently when it went negative, when they've tried to, as they say, normalize or decrease all of this stimulus, all this money printing they've done in the past, happened at the end of 2019, and it happened this year, basically all of this year. So January, February, March, you'd see on the tooltip there, annualized run rate, negative, and it's just now, as of May, let's zoom in and catch it, and negative again between May and June, but it's very close. It's very close to zero. It's very close to flat at the moment, year on year. But you can see, obviously, the big decline, that was last year seems to be over, but you never know. Maybe they can try to do it again and really, prick inflation and all that stuff, but price inflation. But again, these are things that I'm not even actually interested about in the short run, as I'm sure you're not either. It's more just a story about what they typically do, and for what they typically do, that's this line: compound growth rate. That's the number in red that they're always hovering around. Just like I showed you with the physical cash, there are different numbers. And for the worldwide monetary base, that number is 13%, which means 1% a month, right? Because you compound 1% a month. It's not just 12%. It's over 12. It's closer to 13%. Shows you the power of compounding. And that's what's happening to your money at the core of the system at the end of the day. 13%. That's what it's been like since the fall of Bretton Woods, since the end of since the Nixon shock, the last 50 plus years. So that's the number, I think, to think about.
And what's the doubling rate for 13% compound growth rate?
Sub 6 years.
That's insane. Well, I've been thinking about you in recent weeks too, like going back to our last conversation where you dove into the balance sheets of Fannie Mae and Freddie Mac. I had John Titus on from Best Evidence, who's done some really good research, and he essentially is honed in on the FHLB loan exposure that the banks have. And he's pinpointing that as an indicator of stress. Like if you are a bank with a crazy assets to FHLB loan exposure, like you're likely to go down as time moves forward. I think Charles Schwab has something like 130% exposure. Their FHLB exposure is 130% of the equity they have in their company, the assets they hold on their balance sheet. That's like the Federal Home Lending Bureau, I believe. And I wasn't too familiar with them until I spoke with John, with just building on our conversation from last time where we dove into Fannie Mae and Freddie Mac. Like, I wonder if that's connected to that as well.
Did you ask him about how insane those debt balances are, just overhanging on the economy?
No, I didn't connect the two dots while we were having the conversation. It wasn't until after where I began to think about it.
Yeah. No, but I mean, there's just, serious issues that are still hanging over these companies and big banks' balance sheets. And, COVID didn't help it. Okay. COVID made everything worse. The response, the knee-jerk response is typically what they do, right? They say people are in pain. We need to print money and help them and give them stimulus and all the rest. And it's like the same story that governments do basically from time immemorial. So I can't really, I'm not a trader. I imagine there are more interesting ways to trade some of these charts and some of this news if you really have your hand on the pulse and want to be in front of the screen, 24/7 or whatever. But at the end of the day, I think it's great for Bitcoin. I mean, if we look at this chart again, you can put it up, Logan. It's not the change in the trailing 12-month rate is not correlated to Bitcoin's increase in price, right? So remember, look at the dotted line in 2017. Well, let's start with 2013, right? So that was kind of like one of the first big booms, went over $1,000 for the first time, right? In the end of 2013, the monetary base was trucking out right about the typical average, the all-time compound rate, 13-14% per year. Let's look at the 2017 cycle. Same thing, 13-14% per year. And then they tried to slow everything down because, of course, all the other markets were hot then as well. And then COVID, a lot of markets boomed, a lot of meme stocks, so did Bitcoin. That was an extreme bump, right? We're up to 40% year on year increase of the monetary base. But even here, when it was, I'm looking at 2019, I'm highlighting the 2019, which is a relatively flat year-on-year increase of the monetary base, really when they're trying to normalize, when they had the repo spike and all that stuff and the season of the repo market in the end of 2019. Even during that period, there were little mini booms in the Bitcoin price. Like it's just not like it's necessarily correlated, in my opinion. Yeah, you could say that, 2018, 2019, 2018, of course, definitely is a down year. And that trailing 12-month rate was going down. And then in 2022, I guess we can say it was a down year. And yes, this rate was going down as well. But how much that's going to relate to Bitcoin in the future, I just can't say with that, but I could definitely, we can look at some Bitcoin trend lines, which I have as well. Those are the fun ones. We just know that we're generally increasing there on a power curve trajectory that's much better, at preserving your purchasing power. So again, don't want to sound like just a extreme buy at any price sort of hodler, but I don't necessarily see any of these big swings as being like super good or super bad for Bitcoin.
Yeah, I mean, an external to where Bitcoin fits into this conversation, just looking at this chart, it looks like we're going to need some sort of mean reversion at some point
Mm-hmm.
soon,
Yep.
like where it's sitting, trending upward a little bit.
Yep.
But yeah, and then you think about like the posturing from the government here in the United States really beginning to grease the wheels for more lockdowns or a climate crisis that could bring about a new form of lockdowns. It seems like they're beginning to look for an excuse to turn the money printers back on at some point this fall or later this winter.
Yeah, and if they do, you see the mean reversion that happened with COVID. I mean, if it's as bad as that one, you're just going to blow right through the mean and go the other way. So from that side, yeah, I guess that's definitely good for Bitcoin. But as we know, there are a lot of other spillover factors that happen from controlling the money supply, these planning boards that think they can control, all the prices and everybody's actions in the entire economy. Planning board of just a dozen people or so. It's just insane. It's an insane way to do things.
Yeah, and then it's really unnerving to an extent, because I'm sure you've seen it, but like in recent weeks, last month or two, the amount of videos that have been popping up on social media of people experiencing extreme amounts of stress due to the inflation they're seeing in their everyday lives, whether it be here in the United States or more particularly pronounced up in Canada. Like it just paints a really scary picture if all of these insane moves that the Fed has made over the last couple of years to get rates up to tame inflation. It brought it down to 3.2%, but if you look at core inflation, it's still above 4.7 pretty consistently, I believe. And then, as we all know, those metrics are completely bunk on their face.
Yep.
Inflation's much higher than it's being reported. And if we get to a situation where something happens in the banking sector, or who knows what happens, it probably happened in the banking sector, and they're forced to turn the money printers back on. Like, again, it's a bit unnerving because it does not seem, to me at least, that they've properly tamed inflation. It may show up in the CPI that they made a lot of progress, but if you anecdotally looking around, it doesn't seem like any material progress has been made.
Right. And again, that's where I always fall back to this, like, look at the all-time trend line, right? I mean, that mean reversion may happen. It may not happen for another 6 months or so. But, if the GFC was any indication, after the fat years of the early 2000s, or obviously COVID, you can just see that mean reversion is never just, especially in recent years, it's rarely kind of hugging that mean. It just flies right through it. And that's why you just got to think about, I mean, what is it going to do when the base money of the world increases at a rate of 13% per year, or I just looked it up, by the way, it's 5.7 year doubling time. So a little bit more than every 5 years and 6 months, the money supply has doubled. The base money supply. Right? I mean, that is going to affect the rest of the economy, and you have to prepare for it. You just have to prepare for it.
Yeah. Get some Bitcoin freaks.
Yeah. You want to look at a Bitcoin chart?
Yeah, let's look at the Bitcoin chart, because I was actually looking at the rainbow chart earlier today.
Yeah. So it's very similar to the rainbow chart. They probably, whoever is, I don't know, there's many people that create rainbow charts, but it's some sort of a trend line like this. It's called a power trend line. It's 4 basic trend lines. Just to remind the listener, viewer, we could do a linear trend line, which is like a flat trend line straight through. We could do an exponential trend line, which would be also straight on log scale. This is on log scale, so it would also be a straight line on log scale. There's also a logarithmic, which is a bit steeper than this, and there's power. Power curve is kind of a blend of those. It's a more shallow on a log scale type of a curve, but it does decay a little bit. The rate of growth is faster at the beginning on log scale, and then it does decay, kind of like a logarithmic, but a little bit more shallow. So, the beauty of these very simple charts, unlike other, more hyped charts, which don't take into account demand and other things. This is a very simple one variable model. It's time is the independent variable, price is the dependent variable, and you just calculate your coefficients. You can run this trend line, and then from there, once you have the trend line, you can do these bands as I have them, these red and blue bands. And so we can zoom in here, and you can really start to see more interesting things. So these bands, as you see there, I have the 2 sigma band and the 1 sigma band. Basically everything between the blue bands is a 1 sigma move. What does that mean? That means that anything between those blue bands is basically a 2/3 of the time event. It's a 1 sigma event. It means it happens 2/3 of the time. And anything between the red bands is a 2 sigma event, or a 95 percentile event. It means 95% of the time the data is going to be between those bands. But if we ever get outside of those bands or close to the edge of those bands, that's where it's an interesting phenomenon. That's where it's an interesting move. So you see here in 2017, we got up to 20K. It was very close to a 2 sigma move, not quite based on this trend line. It was a 2 sigma move. And you see, after the FTX debacle, the final nail in the coffin of all the nonsense of 2022, we bumped along a 2 sigma move to the downside. Okay, so when we went pretty much right after FTX filed for bankruptcy, we fell down to 16,000 there for a few months. End of 2022, start of 2023, that was a 2 sigma move to the downside. So we've pulled back up from there. We're around a 1 sigma move now. Okay, getting outside of a 1 sigma move, I should say, and we actually just did with this fallback from 30,000. I know we had a little bit of a bump today, up to 27 or so. I'm not looking at the price right now, but this is only from a couple days ago. It doesn't matter. It's not going to affect the all-time trend, but that's where we are. And then the fun thing with this is you can actually use this to predict out, and this 95% R-squared model that I have by December 31st, 2030 takes you to about $600,000 per Bitcoin. So it's a nice thing to think about. And again, these are statistical models. I'm not doing anything crazy. It's very basic stuff at the end of the day. Maybe compiling it in an interesting way, but this is no fancy math here. It's nothing to do with the Bitcoin emission schedule or anything. It's simply based on the price. And if you have any bets or something, we can look at how the bands shape out.
These guys are really going at it right now.
Okay, let me switch over to the next one. You froze a little bit too. I thought I completely lost you, but I got you. Okay, this one as well. This is a good chart to look at because it can show us how good or strong of a black trend line this chart was, right? Black trend line's in the middle, roughly in the middle, right? That's the actual trend line. As I said, if prices continues to fall below this line, this trend line will fall. If it rises up, the trend line will rise. So the trend line moves every day. It's not like it's a fixed thing. I'm trying to predict the future or anything. It does move. But we can still ask ourselves, how strong is this black line? For that, we can look at this chart. I've showed you this before, Marty. We have different years of trend lines where I just stop them based on that year's data and then move forward. So let's take off some years here and just look at 2010. This is like the best trend line ever. It'd be great to get back on this one. But, you know, as you see, the early years, the first year basically where there's real pricing action of Bitcoin, very thin pricing action. I started from Bitcoin Pizza Day, so it's not even the full year. But you're just, you know, you have this Slashdot article, you have a lot of things that are exciting, and Bitcoin's, you know, going over $1, going over to a few bucks, maybe not a few bucks by the end of 2010. Yeah, still in the 20-30 cents range. But anyway, quick escalation from nothing. If you just look at this year's data, do the same calculation and only do a trend line from there, you get this trend line, which is monster. So if you take it to today, the trend line, you're not reading this wrong, predicts that Bitcoin's price will be $1.3 billion per Bitcoin. $1.3 billion. It's a great trend line to be on, but unfortunately, Bitcoin lost the trend, which is okay. We revise our trend lines with this stuff. And by 2030, actually, it's like $128 billion. To be a great trend line. We're off that. All right. Obviously, the way that the price in the market has worked, it's pulled it down. So we're off this trend line. 2011, 12, 13, I don't have those, but know that they're somewhere between this blue line and the black line. But here's the interesting thing. From 2016, I have all of the different trend lines as we've gone through. So I'm just going to draw them all right now. Okay. See if you can spot them. 2016, 2017, 2018, 2019, 2020, 2021, 2022. You probably can't even see them because they're all stacked up. Let's take a look at the 2010 line. They're all stacked up on the black trend line, which is a good sign. This is even better. I've done this analysis on my YouTube channel of like gold. This is even better than gold would look from 2011. You know, the 2011 and being very, very favorable with gold, like from 2011 back to not even like through the 80s, but only like through the 90s, with like the bottom when gold was at $200 an ounce, then went to $1,200 an ounce. That's, you know, the 2012 trend line would have taken gold to $30,000 an ounce, something like that. But all the other trend lines from then on have gold like down to $5,000 an ounce, $6,000 an ounce. So gold has even more extreme swings than Bitcoin. Bitcoin is very and they're spread out, by the way. The point is that they're spread out. But this is pretty interesting. From Bitcoin's 2016 trend line, which is the lowest, in fact. We're not lower than that. Zoom in a little bit even more if you can see it. 2016, it's in red. You know, as of August 28th, the all-time trend should be $56,000 per Bitcoin. 2016's trend line is $55,700 per Bitcoin, $800 per Bitcoin. That's a little bit lower than the current trend. But all the other ones are a little bit higher and close. So again, it's a nice example of the model, which shows that it's pretty consistent. The trend line's pretty good for the last, 7 years. And we're below it. We're pulling it down. We might make an all-time low. 2020 was also a low trend line. You see it's $57,000, 940. I had to change the color because we just went below that one. So that's a blue one now because it's above our current trend line. So there's only 1 year which is below. But even with 1 year, it's quite interesting. It shows that this Bitcoin trend line goes up, goes down. It doesn't just go down all the time. And we might make a new low on that trend line with this cycle. Nobody knows, but if we don't, that'll be even cooler because then we'll have not put in that bottom of 2016 on the trend, on the trend line, and as long as that Bitcoin price keeps trending up and starts to get above that trend line, it will pull the trend line back up, the all-time trend line. So it's a lot of discussions about trend lines there, especially if you're listening to this, dear listener, and not watching. But the point is that this this nice power regression trend line, which I have a lot of videos on this on YouTube. You know, it's a pretty solid, I think, representation of where Bitcoin's price has been over the last 7 years.
It's funny because you mentioned gold sort of went off its historical trend line in 2011, 2012. That was right when like GLD dropped, right? That's when GLD launched, was around then.
Gold, it was getting up to $2,000 an ounce at the time. That was like an all-time high for gold, but then, you know, went into a 10-year bear from there. So they're the point is they're kind of all over the place if you do the same analysis with gold. Whereas with Bitcoin, yeah, they all are all over the place in the early 2010s, but that's a monetary system just getting started. Like, give it a couple of years. You know, am I saying that they're all years after this are going to be, you know, stamped right around this trend line? No, but it's pretty interesting that they have been since 2016. And,
yeah, no, that's the point I'm trying to bring up is like with all the news around the ETFs that may or may not be coming to market, does that sort of throw an interesting externality in the mix that could push up this all-time power trend?
Yeah, I think a lot of people are hoping that it does. And I saw there was some good news for GBTC as well. But I'm not too deep in that saga. It seems like a complete mess. But regardless, if BlackRock gets approved, that's obviously a huge deal for institutional money coming in.
Yeah, that's the big question right now. Is it similar to like the CME futures launching in 2017, where it's sell the news, buy the rumor?
Yeah, you still got the lawn mowing services near you, right?
Yeah, they should be done soon. They should be done soon.
No, I'm just saying we can move on. It's just a couple Bitcoin charts. They're interesting. Check my YouTube channel for more on those. Which one did I want to talk about? Here, I can show you this one really quick. This is the Scandics. So let's even take out Denmark. These are in their own currencies. Like, they're all kind of similar, actually. It's in kroner. They're all called kroner. But here you see Sweden in blue, Norway in red. Sweden really, from 2008, from the GFC, really tried to get rid of cash and did. They were at, you know, over 100,000, 110, not 100,000, be 110 billion kroner, Swedish kroner in physical cash. By 2017, that was down in half, basically 56 billion. And Norway, more flat, let's say. They didn't, you know, really have to cut it much, but they were at, say, 50 billion kroner around the GFC, and now they're at 40 billion. But you can see in both cases, particularly with Sweden, like, it's kind of reversing, floating back up, as we said, and that's again interesting. And Denmark they're pegged to the euro, so they never really did it anyway. This is kind of just doing what the euro does as well. So Denmark is still growing, but the Scandics, you know, Norway, Sweden in particular, they're the ones that are really, really trying with this. You know, it's like, at least get your physical cash. If you say you want to go into CBDC, see if you can actually get the physical cash out of circulation. And so far, we've seen no country that's been able to do that.
Yeah. Well, when it comes to Sweden, I'd be interested to see if this chart is telling a story about their immigration policy over the last 5 years. Like, are a bunch of immigrants coming in, don't have bank accounts, and the demand for cash has simply gone up because you have a new labor force entering the market that doesn't have bank accounts and needs to get paid.
Yep. Very good point. The Syrian crisis in particular was, you know, 2014 to 2016 there. And you can see from 2016 that bottomed out their attempt to get rid of cash, and now it's slightly up from there. So very good point. And all of these things, issues that are just not going to go away for countries that are trying to control.
Yeah.
So, yeah. Yeah, sorry, go ahead.
No, I mean, pull up like the national debt chart that you had up there, because I think that's important to touch on as well. Yep. I mean, obviously we had the debt ceiling impasse earlier this year, the debt ceiling essentially got eliminated until 2025. Probably won't be reapproached till 2026 because we'll have a new president coming in. Then we'll have to pick his committees, and it'll take time for.
It could be never reinstituted, man. For all we know, I mean,
yeah,
we could be in a whole new world by then. Yeah, but go ahead.
You have that. I believe it was June or July. We added another $1 trillion worth of debt. Then you had the Treasury come out and say, "Hey, we're actually going to issue $1.85 trillion worth of bonds between now and the end of the year." So rough math there is about $4 trillion being added to the debt in the second half of this year.
Yep. Just a quick note. I can put these in log, dear listener, viewer. Some people have requested that, but it's actually better, I think, to just, this is a 250-year chart. So yes, log helps, but with the tooltip and with zooming, I think it's better to just look at it in linear. So that's what I'm gonna stick with. But if we zoom into, the last 30 years here, and I talked about this actually recently on Peter McCormick's show, because he was having a discussion about, okay, we're going to get more liberal, classical liberal minded politicians in. Maybe it seems like something may break, and he may be right on that. I mean, who knows? I'm still pretty disillusioned with politics, particularly U.S. politics, but as I know you are as well. But regardless of if they do, think about this. So here we got it. In 1990, if you're listening, we had $3.6 trillion, 3,600 billion, $3.6 trillion in national debt. Now we have 31.5. It's even higher than that, I think, in June, whatever. 31.5 trillion now. Okay. So up 10x in 30 years. My Zoom is a little bit wrong. Sorry. Something like this. But think about the Clinton years. Okay. A big deal for Bill Clinton was balancing the budget, something he still talks about to this day. Such a big deal, right? And he did that for a couple of years, 3 years maybe. It was mostly his second term, going into the new millennia. That was here. If you think about like how much this is talked about, how much this is like put on a pedestal as the best thing, the divided Congress, Newt Gingrich, all these people were working together, and sex scandals, and he was a bad dude, and maybe killed some people. Bad things were happening, but they still had some good, they had some good things with this divided Congress, and it was just a really good thing for the country. That is just like a little crescending, like descending plateau there, just a little bit, like almost okay. We're leveling off this increase in debt to about $5.6 trillion at the end of the millennia, and then up 27 trillion over the next literally 3-4 administrations: Baby Bush, Obama, Trump, and Biden. I mean, it's all of them have increased the debt significantly, 30 to 40% during their reign. And I don't see what you do to that otherwise, unless there's major outside external factors. I just don't see how this is stoppable. I don't see how a libertarian candidate, he mentioned how Dave Smith coming in and might want to do something, and or he's on Joe Rogan. And look, even as well-intentioned and well-spoken and principled as a lot of these people are that want to get into politics, I just don't. And I don't see it. I don't want to sound too, throwing my hands up in the air. It's never going to be done. But if you just look at this over the long term, all countries look like this, by the way. Argentina looks worse. Some countries look much worse. Some countries might look a little bit better. But all countries look like this, and something usually breaks. And they reset.
Yeah, let's steel man it. What extraordinary measures would somebody need to take to fix this? Just like a pure default?
Well, I would say, if you want to steel man it, I would say default is not the option that they would take, right? Because we've been soft defaulting for decades, right? We've been rolling over, devaluing the currency. devaluing the dollar, and that's the soft default. The hard default, I would say, is not the steelman argument. The steelman argument, that was what they say in debates. It's what they talk about. I saw an interesting tweet from Taleb, actually, as much as he's just proven to be a complete dolt on Bitcoin. He was quoting some people in the Trump campaign, saying like this time, so like Trump is going to really clean the swamps, really going to do it, and all this bullet point list of things. I can't remember the guy's name. He does this like CPAC. You probably know who he is, but I'm not in U.S. politics too much anymore over here in Europe. But point is, Taleb called it. He was like, look, I mean, only a sucker goes in twice for the same candidate, expecting a different result. How many times has this been done in any industry, politics, business? I know there are people that are really big fans of Trump and are very principled and whatnot, but you just cannot. It's a definition of insanity. If you're like, Trump did not do that much during his first term. You can't blame it on, he was learning the system. He's kind of outside of politics. To expect, if Trump wins, to expect that he's going to come in and like really clean house, drain the swamp, do everything you want him to do. Just look at this debt chart and tell me that he's going to flatline that and make it go down even. I say no way. His wall alone is going to explode the thing if he ever gets that done, which he won't.
I mean, he's proven. I mean, this is just like the visible debt. We're not even talking about the 220 trillion in unfunded liabilities.
Social Security, Medicare, and Medicaid are off balance sheet. It's another nice thing the United States like to do, which most countries don't do.
And people have to remember, in the context of Trump, like he oversaw the largest expansion of the monetary base ever. To think he wouldn't use those tools again when push came to shove is, like you said, insane.
We didn't even mention that, did we? Yeah. I don't know. I don't know what you're thinking. I don't know what you think about this election season. I mean, it seems scary to me. But
why do you say scary?
Just because two old guys again going at it, and their hands on the codes and all the rest. I mean, as we know, it's a pretty, their hands are tied. Regardless, the system itself is completely institutionalized. I mean, I see some podcasts. I see people really trying to interview these people, hold their feet to the fire. I saw Trump on Tucker, like maybe trying to say, like, okay, what will you do about the agencies? Are you really going to clean house? Going to do this? And of course, it's like non-answers that he's given. But that's the steelman argument. Is just their non-answer, flowery comments that they're going to try to do and say during the debate. But when push comes to shove, when you're actually sitting there, I mean, it's just an institutionalized thing, and that control is not given up easily. It's certainly not given up from the inside.
No. Yeah, I think it's an absolute shit show. I mean, just looking at the last chart you showed, like we're approaching the vertical point of the chart where it just goes straight up. It's going to happen at some point in the next couple of years. And obviously, that's why we focus on Bitcoin, try to get people to the life rafts while all that happens, and hopefully can provide some sense of a soft landing, a softish landing, a relatively soft landing, a safety net, if you will. But it's going to be chaotic. I mean, again, those unfunded liabilities alone, like that's never getting paid back.
No. This is an interesting one if we layer in the central bank holdings. So this is basically, it's essentially the monetary base. It's a little bit of a different number I'm taking here, the asset side. This is actual assets, United States government bonds, securities on the Federal Reserve's books. So just a reminder again, the way that they get money out into the system, they could buy anything, but they typically buy government bonds, right? So obviously, who's the husband, who's the wife, the central bank, the government. It's it's core related institutions, and the central bank's in charge of monetary policy. They get money out into the economy, but how they do that is they buy assets. They could buy anything. They could buy real estate. They could buy stocks like Japanese government and Swiss government, central banks. But nonetheless, mostly it's treasury securities. So it's a little bit higher than the monetary base. It's a couple trillion higher. It's because it's reverse repo facility on the liability side. We don't need to talk about that now. But nonetheless, here's the number. You compare this with the national debt. Do a percentage term here. And we can see that the peak was during Trump's term. I guess it was, but when did Trump leave? December 2020? Is that right? So I guess it was the start of Biden's, but it was going up to it at the end of Trump's term. The peak was 28%. Again, on book government liabilities of the United States, which are well under the unfunded liability number that Marty keeps mentioning. 28%. And that's an all-time high if we just zoom out. In the 70s, stagflation, it went up. Vietnam was ending, went up to 17% the central bank owned. But the Fed, only being around for the last 100 years, never owned this much debt. And that is coming down. Okay, since Jackson Hole of a couple years ago, that is coming down. They're trying to normalize again. Same thing they were trying to do in 2019. But again, we saw in the monetary base the year on year. It looks like it's kind of dipping, like you just said. Doesn't look like that yet here. But how low they're going to get this? Like if they're going to get this below this level in 2019 of 15%, I'd be very surprised. Be very surprised if, this is a matter of months, I think, as we're talking about, right? 6 months, 12 months. I mean, you're really going to pull this 23% ownership of government paper down to 20 or 15%. I think it's just too much pain. It's too much pain to do otherwise. So this is the whale in the marketplace, is the Federal Reserve, what they purchase of United States government bonds.
Yeah, and I mean, just taking a caveman's view of this chart, like looking at any point in time where it's the black line has dovetailed into the green shade, the light green shade, it seems to have had to reverse. I don't think there's any mathematics behind it. It's just
that's a good caveman view of it. Yeah, but yeah, I think it's just the visual on the right axis. But that's a good STF view of it. No, I mean, you're right. You're absolutely right. I mean, look at that. Like it's trending up, and that's pretty funny actually. I didn't think about it that way. You could be right.
Yeah,
it's a matter of months, man. It's a matter of months, and we already know that the debt is going up. This ceiling is suspended. Like that was a surprise. Like that was a secret. It's this song and dance. Like we act like we don't know that it's going up every single session of Congress. This has happened like 30 times. It's
yeah, and this Republican Congress is trying to say they came away with a bunch of wins. It's like, no, you didn't. You suspended the ceiling for 2 years, likely 3 or more.
Yeah. Yeah, so this is a big one. This is a big one, I think. And I don't see an easy way out of this one at all. No, I don't see Libertarian, Democrat, Republican, any candidate that can change the trajectory of what this is. I mean, this represents like the guts of the bad promises that governments have made. Because remember, the debt increases when they spend more than they take in taxes in one calendar year. So this little happy time with Bill Clinton, his second term, it's just a little bit of a crescendo into happiness, and then it just took off again. I mean, it's unstoppable.
Yeah, and after the great financial crisis, it looks like the line's like flat, like it's very much being manipulated pretty aggressively. Yeah. If you go back to the longer view of the chart, it does look like there's at least some sense of markets trying to determine, or the government letting the market try to determine things.
Yeah, it's true. It does fluctuate much more, doesn't it?
Yeah.
Maybe even going down some years, some decades. It's very true, especially from the Vietnam peak. It fluctuates a lot more. You can see it in the black shaded line, whereas here it's just completely more straight. There's no, seasonality or changes there. And this little dip here, by the way, where if you're listening, which is probably hard for you at this point, if you're listening to all these charts, but we were at 8-9% central bank holdings of government paper before the GFC and dipped down to like 5. This is where Ben Bernanke was trying to figure out what to do. So basically swapped out government bonds for commercial paper. And this was just all the facilities, that's massive. They figured out how to get that off the books after a year, but just massive corporate bailouts and everything took over the Fed's balance sheet, and they had much less government paper during the GFC.
Yeah. I mean, and then you add in with the current interest rate policy, I mean, just the interest expense on the debt that's expected to balloon to like $1.7 trillion a year once treasuries roll over the next 12 months. And then we look over to Japan, and they've seemed to have completely lost control of their yield curve, which they've successfully controlled for many decades, which begs the question, like, obviously Japan is the prototype for quantitative easing as a policy, and it seems to be nearing its end game. And I guess the question is, like, do you view Japan and their inability to control their yield curve in recent months as a canary in the coal mine, that this stuff is getting out of control? They can't keep the cat in the hat anymore.
Well, one thing I always told you was we got to be humble. We got to be careful here with where we think we're going with Bitcoin in this picture. And though Bitcoin is 500 billion, right, which is a lot higher than it was, 5 years ago, and when the monetary base was 20 trillion, now it's 27 trillion globally, and Bitcoin is 500 billion. Bitcoin's the 8th largest currency, if you call it that way, if you frame it this way, which it is, outside money. You have the 4, including Japan, which you just mentioned, the big 4. Then you have the pound sterling, you have the Swiss franc, the Indian rupee, and then you have Bitcoin. And Bitcoin actually around 27,000. When you get up to 30,000, you're already bigger than India again. So we're at number 8, number 10 if you include gold and silver. But it's an amazing achievement for what Bitcoin has done. Nonetheless, I always caution, imagine you were a gold bug, like right here in 1980. It's like chaos. Vietnam War was ending, a lot of chaos, stagflation. Gold, if I layered in the gold price here, it'd be going up to $850 an ounce for 2 seconds on world markets, but everyone would be loving it. You would think that sound money was returning. You would think that we were, that you had won. I say this all the time, and I know I've said it on your show before, but that's the only risk. And I think the Bitcoin mitigates the risk. Like Bitcoin, it's clear based on those power trend lines that we saw. It's clear that the trend is up. It may go tens of thousands of dollars under the trend line for years, but it's clear that the trend is holding for now. I shouldn't even say for now. It's clear. It's a clear trend that Bitcoin has, and we know the value proposition and all the rest. Whereas gold has a lot of antiquity baked into it, literally and figuratively, that just hasn't held its trend lines well at all. So there's a lot of good things that are happening for Bitcoin there, but we still have the lessons of the past. And in the modern era, the United States government debt when gold was $850 an ounce was, $830 billion. You would think, as a gold bug, that would be a signal that, okay, the markets don't trust U.S. government paper. They don't trust the dollar. It's time to return to sound money after 10 years of being all at the gold standard. And you see what happened. You see what they did. So I just have to say that to your canary in the coal mine comment, because I totally empathize with it. I sympathize with it. But, Japan in particular, they have been impressive at kicking the can down the road, and markets like normalcy, even during we had a ridiculous few years here, right? From 2020 to now. And everyone wanted to get back to normal. They wanted to get back to, a little bit of lower interest rates, a little bit of of predictability in the markets, and they're not getting that right now. So that's interesting. But if can they extend this for another cycle of 10, 20 years, right? If everybody if everything goes to shit and they have to take interest rates from where they are now, which are pretty, I don't have an interest rate chart for you next time, pretty high, right? 5, 6, 7%. People are suffering on their car payments, mortgage payments, or whatever might be adjustable, credit card payments. Pretty high rates all around the world. Can they take those back to zero? Yes, they can. They can take those back to zero. Will it destroy the currency? Again, I think if you were a gold bug, you would have been loving life in 1980 and you thought we were returning to it, but we didn't. So I think Bitcoin protects you. I think Bitcoin is the steps that you need to take, but I don't have an answer for what comes next. Do you?
No, I'm not going to pretend like I do. In the midst of all this that's going on, whether it be the banking crisis earlier this year, back to COVID stimulus, the expansion of the monetary base, I will say it does seem like it's getting to the point of insanity, like to such an extent where it's like, all right, it seems like something has to break, but I do also have to recognize that I'm in somewhat of a bubble and I'm a bit autistic about following this stuff and really immersed in it, while most of the world probably is not. And like you said, they've proven time and time again that they can kick the can down the road. And then analoging to gold, I mean, there's a lot of, I think, pretty strong theories that the governments and banks essentially work together to artificially manipulate and hold down the price of gold, so that it didn't send a signal to markets that they were losing control. Like, to think that they wouldn't try to do that with Bitcoin as well is probably a bit naive. It's proven. We got the London gold fixing scandal. I think another JP Morgan trader was just arrested for fixing gold prices. So I think I don't think it's a theory. Yeah, I think it's been confirmed to be a reality to some extent. It's probably still going on to this day. And to think that these governments that have so much control and so much power right now and really want to hold on to that will not employ those same tactics against Bitcoin, because if the Bitcoin price runs, that sends a signal to the market like, hey, more people are trusting this money that's completely separate from the state. Maybe you should adopt it too. People start dropping their dollar bags for sats. The government does not want that to happen. So I could certainly see that playing out. But then other side of that coin, pun intended, is that I don't know. I think Bitcoin is such a unique animal in terms of the fact that it's digital, it's globally distributed, it's very easy to acquire and to opt into. Like, does that create a condition where it's much harder to suppress that price, particularly if people are actually benefiting from the natural properties of the network that allow them to actually take control of it? I think if enough people do that, it makes the government's job of controlling prices a bit harder. But then they just throw more weight behind it. I don't know. I could see it going one or two ways. I could see Jack Dorsey's hyperinflation tweet being extremely prescient. We'll look back at that 5 years from now and be like, yeah, he was right. We could be in the middle of it right now. And if we are, people are going to need alternatives. Bitcoin, obviously, we believe is the best. It will benefit massively from that. But I guess the question, the unknown known, is like, how much more power, gunpowder does the government have to sort of manufacture a facade of stability?
And what if they actually start to reserve Bitcoin or buy Bitcoin?
Yeah. I mean, we do know. I mean, Oman came out last week, announced that they're investing $1.1 billion in Exahertz, which is a Bitcoin mining company. Obviously, we had the Kingdom of Bhutan come out unwillingly earlier this year due to the fact that they got swept up in the bankruptcy proceedings of Celsius and BlockFi. They basically had to come out and say, yeah, we've been mining Bitcoin since 2020, and yeah, we're going to double down. Obviously, it's been public that Gazprom and BitRiver have a deal together, and so Gazprom is a state-owned oil and gas company in Russia. So Russia's got some skin in the game to some extent. Obviously, historically, Venezuela, El Salvador are in the game. Seems like Argentina may have a president that's very open to Bitcoin. You could see proliferation of adoption down there. And I actually saw, I think it might have been River, dropped a research paper highlighting that Argentina's actually got more Bitcoin adoption and usage than El Salvador does at this point without any legal tender laws or anything like that. So it does seem like
interesting. I'll check that out. Yeah, I can absolutely see that as being the case. It's a huge country.
Yeah, and it does seem like. So yeah, it's hard to tell. I guess it's just prepare for both outcomes. I mean, selfishly, for the stability of the world and to avoid a Mad Max scenario, while also being able to stack more sats at lower prices. Like, hopefully they can kick it down the road a bit more. But then the acceleration this to me is like the negative externalities of these can kicking policies build up and compound so much that maybe in the long run, it's probably better to just rip the Band-Aid off sooner rather than later and begin rebuilding.
Yeah. I think in the short run too, it would probably be good for, I mean, it has been good and will continue to be good for price when you have more of these announcements or leaks or whatever with governments or government entities or government energy companies mining and stacking. But even if like the Federal Reserve said that we're going to, or they secretly did it and then we have like, a certain amount of Bitcoin, we want to add to the stability of the dollar or something. That's where I think it starts to get a little bit dicey because then you're on the same circle that you were with gold. We know that the Bitcoin market is much more, at least we believe that the Bitcoin market is much more resilient globally due to its digital nature rather than physical nature than gold has been, because you're absolutely right. And I agree. Like the Alan Greenspan quote, he said during the 90s, central bank, he said it, Gata quotes it all the time, like central banks stand by ready to sell gold should the price rise. Like it was absolutely a price suppression scheme. They probably don't even have a lot of the gold that they say they do. They probably leased it out. So it's a whole thing. And that was, but interestingly, over the long term, whether it's due to Bitcoin itself, outshining gold, literally, pun intended as well. I'm not sure, but gold's just still stuck there at 2000. You still got all these gold bugs. We're like, I just think it's the worst type of a boomer who's so excited that these BRICS countries are announcing more gold stuff. And I just think that's the worst type of boomer. I mean, you know how I feel about Russia, but I mean, these are human rights abusing China. Like these countries are not model countries that you want to have your stake the stability of your currency around, and just to think that that's going to be a beautiful thing for your asset. I just think it's way off. It's way off base. And I would feel the same way about Bitcoin, not in the same way that you're mentioning it, because still it's, that they're just doing what they need to do. Nothing is, other than El Salvador, there's nothing like major legal tender, but those might come, and, we'll have Bitcoin people championing those things as well. But I go back to the speech I gave in Prague. I talked about, how easy it was for the Nazis to just come in and take gold. And, it's just one other way of you talking about a nation's treasure. It was literally the first thing that the Nazis did. It's how they funded their war machine throughout the whole war, because the Reichsmark was worthless in Western markets. And they traded, legally with Switzerland and everything, or not illegally, but just in a very shadow market way. But that was gold. It was gold that kept their war machine going. And it was the first thing they did when they went into Czechoslovakia. It was the first thing that they did when they went into Austria. And it was the first thing that they tried to do when they went into Poland. And I told a story about the Polish gold, which I might have said a little bit on this show before, but it's an amazing story of how the Poles got the gold. Literally, they got the gold out of the country as in September of 1939 as they were being firebombed. Bitcoin is different, of course, you know, the distributed nature of keys and how you would do this and hold this and all that stuff. But I still think it's kind of like MicroStrategy, right? Like it's great that they're buying all this stuff, but you know, you don't want to pin the hopes of Bitcoin on MicroStrategy. And at the end of the day, they're just one central actor that can easily be seized. It would be the same way if Bitcoin was under the purview of the Federal Reserve. So it's a catch-22 as well. I haven't quite thought through the end game of that, but I don't think it's a great thing if we rely on these governments that have just ruined, trashed all their other currencies, you know, manipulated the value of gold. Literally, you can say that. You can't say all markets are manipulated, but you can say that about with the gold market for sure. And in fact, I think you and I would agree, like most markets are not manipulated. They're mostly free and always trying to get around stupid laws. But if they try to do this stuff with Bitcoin, yeah, I think it's like short term, maybe good, but over the mid-long term, we just got to keep working more to keep it distributed and not having the same fate as gold, because gold has had a terrible fate over the last 100 years. And if you're a boomer gold bug tweeting about BRICS countries accumulating gold, which they don't even have that much, but if that's what you're pinning the hopes on for your, you know, 401k or your investment portfolio, shame on you.
Yeah, you're fucked too. Well, let's talk about the BRICS. So you had the BRICS Plus meeting in South Africa last week. This is leading up to COP28, I believe. I forget what number they're on for that UN climate event, but it seems like, from what I can tell, these are like back-to-back events that the BRICS countries, BRICS Plus, whatever we're calling them these days, are going to attempt to use to essentially announce like a pivot on their strategy and how they interact in the international markets. And obviously, there's been many theories. I've written about them in the past, and I think at one point I had more confidence in their ability to actually do something than I do right now, as I've thought through it. Like you mentioned, you have a hodgepodge of different types of countries, democratic republics, autocratic regimes, sort of monarchies, if you will, to a certain extent, that are coming together. And I think just purely from a logistics standpoint, like just think that these countries would be able to coordinate and get along in the long run. I just think it's short-sighted. I see it being a massive coordination problem, number one. Like, who holds the gold? How does it settle? What else is in that basket of goods that they're trying to launch? And again, who custodies those assets? Who audits them? Like, I just find it hard to believe that they're going to be able to create a consolidated and cooperative regime that works in the long run. I just think there's too many competing worldviews, and it'll just turn into a dick measuring contest that erodes the confidence in anything they launch at the end of the day.
Yeah. I mean, and, you know, China's probably going to be demanding to dictate most of that dick measuring at the beginning and always. And if they start to filter off or people start to not trust them, which is already happening, you know, what happens then? I think, you know, the whole idea of BRICS bucks or this BRICS gold basket or whatever they might do, I don't think there's anything yet that's like coming out of this. And like you said, I think it's rife with potential problems, but I'm not saying that I'm championing, you know, the old ways of the West either, as I know that you're not. Like, it's just, we know that there's something better. We know that Bitcoin is like light years better, stateless, neutral. And I think that's just where probably, I mean, I know that's where we're focusing our attention. So that's usually what I just tell people. But yeah, I have no love for the boomer gold bugs that think this is a good thing, and like there is a lot of them. If you look, you'll see them on Twitter just talking about this is like going to be great. So much accumulation of gold and all this stuff, and none of the lessons would be learned from World War II, and you know precisely 70% of the gold left Europe and the world trying to get to the United States during World War II. So it was actually, people talk about many different reasons that the gold standard ended. Really, it ended because of autocratic dictators, like wanting to just walk in and take your gold because it's in a vault. Autocratic communist regimes, are they going to be much better in the short term? Maybe, but in the midterm, we're looking pretty bad for dictators right now in many parts of the world. So I just don't see that as a viable thing. And yeah, I know on the other side, like, again, I'm not doing whataboutism. I know there's a lot of people that are anti, everything about America and like what they did to Russia, freezing the Russian reserves. I'm not saying that the dollar system is better. I'm absolutely not saying that. But what we saw was if the gold standard, it wasn't the classical gold standard already fell anyway by World War I. But if what was a remnants of what was happening with gold around the world, and FDR was manipulating the price of gold and devalued the price of gold in the 30s. But as we went into World War II, if you saw that literally 70% of the gold goes into America, and then you have, by my count, less than 30 years, 27 years or something of an American-based gold standard. You see basically how gold handles the extremes, right? The worst of the worst is what happened in World War II. It doesn't get any worse than that. I mean, the murdering, the pillaging. I mean, obviously, the worst is they called it the Zahn gold. It was the gold that was ripped from, Jews' teeth as they were walked into oblivion. I mean, there was a lot of that. I showed these charts in my presentation. I'm not moralizing each pile of gold, but the most swift, direct way that the Nazis stole was just walking into central banks around the world and around Europe and taking the gold to fund their war machine. So that's what they're going to continue to do. If if push comes to shove or come into any hot wars, like that's what you'll see with more centralized gold standards. So that's the worst. That's the absolute worst that can happen. The best is apparently what happened when the gold flowed into the U.S. It flowed all into the U.S. and we set up this Bretton Woods standard that lasted from, 45 to 71.
France said, "Hey, we want our gold," and Nixon said, "Wait, you're gonna have to wait a few months. We're gonna have to go find it." And then,
it was one of the last things he did, and as president, Charles de Gaulle, he in the late 60s, he just started to claim, and he became like the biggest gold bug ever, and the U.S. couldn't redeem and had to suspend. And so, again, it's the same. You would have the same problems with Bitcoin, by the way. Like if you were going to do this, you'd have the same. There's nothing magical about the standard. You'd still constrain yourself and all those things. But I just think it's funny, the extremes that we've seen, right? I mean, literally, it does not get any better than, it does not get any, well, you could say it could get better than what the United States, the situation that we had in Bretton Woods, but let's say it was like the best kind of that we had at the time. And it certainly doesn't get any worse than the Nazis. So, what do you think this like mixture of autocratic, communist, monarchical, however you would say it, monarch regimes coming together for some new gold standard is going to be better? I mean, there's no way. It has to be neutral. It has to be stateless, and we're on the path there. So that's where I think. I just think it's doesn't get out of the gate basically, and I think it's a warning as well for Bitcoin. I think it's a warning. Like I don't know what you think about like MicroStrategy or something, but I'm still not I'm not a huge fanboy of just seeing all these tweets of buying more Bitcoin. Okay, great for the price and stuff, but there's nothing there that that's adding to the decentralization of the network. It's
No, the headquarters being within walking distance of Langley is a bit unnerving. But
my podcast host Alec talks about that. He's there in Tyson Corner, I guess it's called. Yeah, and it's like all of the agencies and lobbyists are there, like you said, walking distance. But I'm not saying it's a psyop. I'm just saying, if again we're not putting shouldn't put your hopes on world truly potential new world money that's decentralized. That's going to be like the next catalyst.
No, and like I actually do have thoughts on this too, and we can wrap on this subject. But I do think it's whatever. Bitcoin's permissionless. MicroStrategy can stack as much as they want, whether or not they're a front for the government. Who knows? I don't think it's likely, but I think it's funny.
I don't either. I think I'm same boat. To be clear, same boat. I don't think it's likely, but it is funny.
Yeah. But the hope is that, and I've been writing a lot about this and thinking a lot about this because we've implemented it into my business, and I can see it actually providing a clear path towards what let's just define as favorable adoption that leads to the optimal outcome of Bitcoin being as distributed and in as many hands as possible outside of governments. And that is the utility that the layered stack of Bitcoin provides individuals, particularly the Lightning Network. And Lightning Network obviously is not a panacea for scaling. Like it's limited. It'll only be able to scale us to a certain extent, and then we'll have to add other second layer solutions to interopt with it, something like Fedimints. But I do think that there is somewhat of a clearer scaling path in front of us right now via the Lightning Network, and again, things like Fedimints and other second layer solutions that will come to market, and that hopefully within the next 3 to 5 years, the user experience of actually sending and receiving Bitcoin over these networks is so far beyond the incumbent system, and it enables so many use cases that are literally impossible in the incumbent system that people are almost forced to adopt it because they want the utility that these solutions provide that literally do not exist in the incumbent system. So to that point, like, and I'm pretty bullish on this, just haven't seen it up close and personal with podcasting 2.0, with what's going on in Noster, with something that we're working on at TFTC, with Lightning monetization. Like, I do think we're getting closer to the point, a tipping point, if you will, of people being able to implement Lightning and create better user experiences and unique experiences, most importantly, that do not exist in the incumbent system, that people will be forced to adopt because they want the functionality that it provides, whether they're consuming content or sending payments around the world. And I do think we've reached a point, particularly at the Lightning Network, where you have robust competition at the implementation layer. We have things like LDK, so you have development kits that are making it very easy to build Lightning wallets and Lightning experiences. And then I think on the business side, you have companies beginning to better understand the nature of the Lightning Network and what makes sense and what doesn't to implement it into their stacks. And I think the emergence of AI, whether or not it's all hype, 90% hype, or all signal, is yet to be determined. But I do think what's going on with L402 and essentially just using the Lightning Network to do paywalled API calls for the energy intensive AI industry is like sort of a natural fit. Like I do see a potential scenario where AI is signal, it is useful, and people do adopt it in mass, and then they're literally forced to adopt the Lightning Network and do these paywalled API calls because it's the only way they can ensure that they're going to be capital efficient with their energy cost in mind. So again, that's the hope. I'm again optimistic. I do think the things that I've seen developing in the space point towards that being a probability, and that probability increasing over time. I do see a path towards that, and again, favorable adoption that leads to an optimal outcome of significant distribution, and more importantly, people getting Bitcoin into their own hands before quote unquote hyper Bitcoinization, or the price runs too far away from them.
I love that, man. Sergey Kotler would always say that from BitRefill. You know, it's like we all love Bitcoin, obviously, spend a lot of time studying it and understanding it. And, you know, the people that go to conferences, they love Bitcoin. It's an easy sell to, you know, use the next best Lightning wallet, or like you said, some API wall, even, you know, for your business using Lightning, which is going to be fantastic and it's going to be awesome. But there's an easy sell for us. It's not an easy sell for the average person that just wants to buy something and wants to do something. So it has to be that easy for the people that don't love Bitcoin, that don't care about it, but they do want the utility. They need the utility, as you said. And I agree, man. I think it's coming. I think it is coming soon. And that's just got to be the way, right? Like, it's definitely, circling it all back to the start of the conversation, it's definitely not going to be the way that Nigeria tried to do it, or the way that India tried to do it with their good old CBPC or CBDC implementations.
Agreed. Yeah. So if you're listening to this, we got to go build it. You got to build the experiences, build the utility, show it to people, make it easy. Got to make it easier. It has gotten significantly easier. I think that trend will continue. That's the goal. Like, armchair pontificating about number go up does have its merits in terms of helping people understand the value prop of Bitcoin. But then there's also this network side of things that literally needs software engineers to build out in a layered fashion to bring the full utility of the network to more people. And the more utility you have, the thesis is the more adoption you'll get. So that's right.
I love it, man. Good stuff.
Yeah. Well, I love you, Mr. Mežinskis. This is always
likewise, buddy.
I want to
never a chore. Never a chore.
I want to apologize for the landscaping that was going on for a lot of this.
You know me, man. I can roll off on these charts, but I hope it was just clear enough for the listener. They didn't give up on us too early. But if you are listening still, we got the Crypto Voices podcast, and then Porkopolis Economics on YouTube, and porkopolis.io as well for a lot of the economic stuff.
Yeah, very high signal content. Any parting thoughts you want to leave the freaks with?
Not really. Stack sats, be humble, as you guys like to say. And I think, as you said, go build it. There's a lot of good optimism in your closing words, and I couldn't have said it better myself. So nicely done.
Yeah. All right. That's all we got today, freaks. Peace and love.
Thanks, buddy.